Maybe just to highlight one point, which is just to make the question negative, which is there may be what many people, particularly if you're coming from a blockchain perspective rather than a capital markets perspective, where you think, oh, this must be the advantage, and it's not. And that is, you might think that it is around cap table management for issuers. So if you think of, say, any listed company, you might think, oh, well, this will help them to manage their cap table. Well, they're not managing their cap table anyway, because if you asked a listed company at any particular point in the day who owns the shares that they've issued, they wouldn't be able to tell you. So that's not the problem that security tokens are looking to solve. They're not looking to solve ownership on a per moment instantaneous basis in respect of for issuers. It's not about that. It's more about creating that record of ownership significantly faster than is presently possible, and disintermediating a lot of the players that are around the capital market space providing services into it, because of the fact that for years and years all you've had is bad technology built on legacies of bad technology on top of more legacies of bad technology. So it's really about disrupting all of that. That is what the major advantage is in the capital market space.
Okay, one more sort of benefit I would like to highlight, and this is not necessarily only STOs, right? Because I have worked for a traditional exchange, so I've seen the normal capital market side. But if you think about this new asset class which is going to emerge, right? This is like 24/7 asset class, right? So that ability to trade even on a weekend or whatever, this market doesn't sleep, right? So that's the biggest advantage. And if you think about the settlement cycles, right? So if you trade normal equity, how much do it's a T+2 or T+3 some markets, right? But this is instantaneous settlement. If you think about the efficiencies which the blockchain element brings into either be it ICO or STO, which eventually there will be a secondary market, right? So think about that as a thing which was not there in the traditional space, right? So the Australian exchange has worked on the blockchain solution. Singapore exchange is working on it. There is a German Deutsche Börse is working on the blockchain solution in the capital market settlement space. So I see the tech and yes. So I would come to Hong Kong, but Hong Kong was not the first. So I went in the order of Australia was the fun, Singapore is, and Hong Kong did. In fact, 2 weeks ago they published something. They're also thinking of that. So that also, I think, is going to be the major game changer, right? In terms of even the investors and the trading community and even the fractional ownership and all those things, right?
So is token custodianship in the institutional world relevant to development of the security token market? How and why?
Well, I think I don't know in what context you're referring to custodianship, but interestingly, I was at a restructuring and insolvency conference yesterday, where we did a deconstruct of what happens when an exchange collapses. So again, we want to live in this decentralized world, but for the foreseeable future, we still have to work around real-world laws. So restructuring and insolvency are very sort of traditional laws, not going to change anytime soon. So again, there's various things that we need to think about from an investor protection perspective, in this space. How are you really going to protect investors if company goes bust, founders decide to disappear, and you can not actually get your assets back? Are you a client or are you a customer? Were those assets being held in custody in some kind of fiduciary capacity? So I think all of that is something that's untested. So having a role for traditional custodians in this space could be helpful.
I would have thought that as you move more towards a decentralized environment, custodianship just becomes less important. It seems to stand to reason. And in terms of, to the extent that you will find some form of custodianship, it might be more on the crypto fund side rather than within at least more important within that environment than necessarily within, say, a decentralized exchange environment. And I would be surprised if it is the traditional custodians who are providing that service. I think the traditional custodians will focus on traditional custodian services in respect of traditional assets that are linked to security tokens, and that would be a very valuable contribution that they'd be making to that environment.
Custody, right, is one of the key elements for institutional participation, right? So if you see, like right now, it's mostly a retail-driven market, right? We saw the whole market cap of reaching 800 billion at the peak, and now it's hovering around 200 billion, right? So, and this is not my quote, but I think we've heard this along, that unless the market cap reaches 1 trillion, you won't get significant institutional participation, right? That's just on the market cap side. But from the custody aspect, right? In fact, this morning we were speaking to one of the custody solution providers, a large name, won't name them. But again, you saw bigger institutions like Fidelity announcing that a custody sort of solution. A Fidelity which manages like trillions of dollars, right, is investing into this space and getting this space, and we expect if they are entering, they better get it right? So in that sense, once the asset tokenization, the other elements are solved, cybersecurity is the other one, but the custody, once you have a robust custody solution, the other aspect is the insurance. So I think there are, again, moving sort of things in that space. And leverage, right? So right now, you can trade levered products on one of the exchanges here in Hong Kong, but that's on the future side. But in terms of the funds, which you touched upon, right? Hedge funds. So hedge funds always look for leverage, and there are large hedge funds wanting to enter the space. So once the liquidity and custody solutions are there, they will kind of come in a big way, right? So that gives them comfort. So my biggest concern, if I have a portfolio of $100 million, right, and this space is like the custody, the traditional hedge funds or the institutional investors are used to the custody model where there's risk, like governance standards, and in fact, there is a third-party custodian who takes care of the assets, right? Right now, you have a hard wallet, cold wallet. The security aspect is all, the onus is on you, right? Even if you're managing a fund with 100 million and you have 10 sort of wallets, right? So that doesn't really help, right? So I think custody is going to institutionalize this asset class much more. That's my opinion.
I have a question for you, Neil. The founders normally think that fundraising is the end goal, but where do you think MageSpire partners can help beyond the fundraising?
In fact, thanks, Chloe. So that is, again, I briefly touched upon it earlier, right? So as founders or startups, right, people think like fundraising is my end goal. So in fact, the problem actually starts once suddenly you have $50 million, right? But the treasury management, the risk governance, how will you basically like manage all that aspects is not what people have thought about, right? Some of the founders are hardcore tech guys, but okay, they're good in what they're delivering, but they don't understand the treasury and risk and governance aspects, right? Like that post ICO or STO, whatever you call it, tokenization, those elements are also key. And coming from a capital markets sort of experience, we would like to sort of help in those aspects also post fundraising.
Thank you. So next question. What asset classes or type of securities are not suited to tokenization?
Actually, I think pretty much anything can be tokenized. I think as far as the asset itself goes, it doesn't matter so much. I think where it becomes challenging is, and I think you might cover that in your later questions, is just the universe of other activities that need to be conducted around the tokenization, which again go into the realm of being activities which require regulation. So that's, I think, the missing piece. And why I mentioned that is because, you know, if you're doing a kind of asset where you can do sort of a club deal, then it's okay. But if you're doing an asset tokenization which requires you to do crowdfunding on a massive scale, then you then bump into issues such as, are you basically doing investment banking type marketing without a license? So it's those kind of practical challenges that make tokenizing the asset difficult rather than anything inherent in the asset itself.
Probably just harking back to the example I used, if it's a situation where the identity of who holds the tokens or the right to the asset is important, is critical, then it's not really suited for tokenization, or at least tokenization isn't adding significant value to warrant the cost of the exercise of going down that particular route. That would be one example.
To concur with what Frederick said, right? So that same example, for example, there's a real estate tokenization, right? So what if in the real world, right? So I transfer like a part of a token representing real estate property from A to B, but does it in the real world, does the transfer or the right of ownership really transfer? Because that is not on the blockchain. So you're just merely shifting a right from, like, in the form of a token from one A to B, but the underlying the registry in terms of the land registration record, so that it doesn't get changed. You can't. There's no point in just tokenizing without the actual transfer of right ownership, right? That's one example. But as Pooja also mentioned, the other aspects of actually dealing with the other aspects of the fundraising, right? That's again an issue.
It just brings to mind something I heard from Andy. He mentioned this in the public forum, so I can repeat the story here. Where a client of mine was looking at doing an STO. The reason being that he wanted to use ultimately securities. He wanted to use tokens as a way of exchanging interest in funds that were going to operate on his platform. And as he was exploring it, he was looking to use a security token offering more as a proof of concept for the overall platform. And he found that the cost and the pricing of undertaking that, and this was, you know, even before he got to the lawyers, this was simply on the, you know, putting the whole process in place, was entirely disproportionate to the amount that he actually needed for the, you know, to operate the business. So, you know, I think that's something to certainly keep in mind, that there are a number of other things that need to go into the infrastructure. The other challenge he had was that he knew that in terms of reflecting ownership that was being transferred, that on top of, at least the way he was doing it, because of the way the token right was going to be written, it wasn't as simple a thing of, you know, transferring the token and all was hunky-dory. He was duplicating what needed to be done in paper rather than eliminating what needed to be done in paper. Which touches on a point that, you know, you need to think about, or one of the things that lies ahead are the changes that are needed in laws to facilitate paperless transfers, for a start. Because if you think in Hong Kong in respect of, say, stamp duty, I can't imagine you going down to the stamp office and saying, oh, I just traded this security token, I want to pay my stamp duty. They will say, where's the piece of paper? I need to stamp. So you'll have these kinds of examples that will come up in any number of ways. And you'll also have you could say almost the government public institutional side of it that needs to change. So that rights that are linked to property assets, and therefore if you want it's not necessarily the case that you want the direct property right to transfer. You may simply want a right linked to the property to transfer. But if it is intended that the property right is to transfer, there's a whole thing that needs to go with that in order for that to be properly documented in a way that would stack up in a court of law.
So I know lawyers are important. That's why I'm friends with them. Besides legal advice, so what other advice do I need when setting up an STO for my firm, and why?
So one other set of quasi-legal advisors that you do need to think about are compliance advisors. I'm just been brainstorming with various sort of lawyers in this space, and I do think that that's actually where the first line of enforcement is going to come, not complying with sanctions, law, KYC, AML screening. And that's actually far easier for regulators to prove, and also something in which regulators have traditionally exercised zero tolerance. We all know the big fines that big investment banks have been slammed with. So I think that's an important piece that you need to address, particularly if you're clearly offering an investment product in the form of security token.
I don't know how many people come into my office and when they're sitting down explaining what they're doing, and then they say, would you be interested in investing yourself? Or do you know anyone who might? That is, something that lawyers don't do, and you need help with that. The other thing that I'm commonly asked is if I say give advice and say this bit of what you're doing that's going to cause you a problem, so you need to change that, either because it makes it security, or you need to get this license, or whatever it might be. And then they'll say, well, would it be different if I did it in Cyprus, or how should I, where should I put all of this, or how should I change my business model so that I don't need to have that license? And that's not really what lawyers do either. They can help a bit, particularly if it's around, are there suitable exemptions and all of that. But ultimately, it's your business, and you have to have the skills and capabilities within your own business team to be able to structure and design what it is to execute and implement your business concept. And there are other people who, are involved in the start to finish of an STO operation, who would then be able to say, well, I've seen, more than 10, 15 deals in this space, and here are some models that might work in respect of how you could put it all together. Now go to your lawyers and let them tell you whether any of your preferred one of these is going to work. So having that kind of expertise is very important. And lawyers will be able to do legal project management. They'll be able to advise on the laws of the place that they themselves are in, but they're not going to run the entire process for you. And the legal part is only part of what the overall process is. It may not even, it's the bit that keeps you out of jail, but it may not necessarily be the bit that makes it a successful venture.
I think to add to what the lawyers have said, right? So the STO, there's no shortcuts in life, right? So don't think that STOs is just a fad or a fashion. Oh, let's also sort of try sort of raising capital through an STO. So if you have that mindset, I think just stay away, right? Because this is more onerous, and like the responsibility is much higher, because the regulatory clarity is still not completely there. So it's again evolving, and maybe in the next year or so there will be more clarity. So my advice is like STOs, yes, would be there, but I think you need to have a real intent why you're doing it, and is it going to be more efficient and on like the balance sheet side or whatever, right? So just don't do an STO for the sake of doing it, right? Because like ABC is doing it, let me also do it. So and it's not one jurisdiction. For example, if you go with the traditional IPO capital market space, it's just one jurisdiction. So here the risks and responsibilities are much higher. So you need to sort of have all that in mind before you sort of jump in. Yeah.
I am mindful of the time, so I'm going to ask one last question before I open up to the audience. What is the most positive or negative thing that could happen in the next 12 months to the security token world?
Well, I think this might sound a bit ambulance chasing, but more enforcement in the ICO space is no bad thing, because I think it's just going to help set the ground rules in terms of what is a security and what you can do if you're offering a security. But I think it's also going to sort of end this ICO madness in itself. If we're really expecting the crypto economy to mature, then moving from ICOs to STOs is a natural progression. So that's both positive and negative.
Well, I actually think that ICOs will just will evolve into a form of project finance with normal venture equity financing backing the overall operation. So I don't think, ICOs by any stretch of imagination have gone away, and certainly, more clarity around the rules will always help. In the STO space, just more examples, more things coming through to market, because as more comes through, we will learn more, and we will also learn more about what regulators are thinking about it, and there will be just more to guide us in making sure that we can help people do what they otherwise want to do. So that's what I would say. It's just if you have projects, bring them forward.
So yeah, in the next coming year, right, and you read it all along. So STOs or asset tokenization is going to be a reality, but only thing is we need more regulatory clarity on some aspects, and also the ecosystem, right, in terms of the secondary market trading platforms. There are some exchanges or protocols working on that in the US and Europe and different jurisdictions. So unless you have the whole ecosystem, right, just not doing an STO will help. You need the whole ecosystem in terms of the other players, and also we touched upon the custody, institutional participation. So that is what I think institutions are waiting on the sidelines. But I think 2019, if you see, even the major investment banks, they claim they're not doing it, but they are actually sort of working on this, right? So even the big boys are working with governments or whatever. You read it in the press, right? So I think there will be more adoption on that front, and maybe in a year's time, I hope we are not in the evolution space. I think that's what I'm expecting. Yeah.
So I'll open up to the audience now. So any questions? Leo?
Yeah, Patrick, you mentioned that the trading systems are generally top-notch. That's a question for the general audience, whoever wants to take it. But building up on that, the trading systems are top-notch, and they've been continuously innovated on. But the settlement systems really suck, and they were kind of stuck in like the legal framework of the 60s with the technology from the 80s. But I'm trying to understand why security tokens in particular are going to be able to succeed at innovating on this settlement framework, when pretty much all the innovations that we have been seeing in all these attempts in the last 30 years have not been succeeding. So what makes security tokens different in the eye of the exchanges, in the eye of the regulators, in the eye of the investors, that it eventually allows them to succeed?
Can have a stab at that, but if you look at how it's done at the moment, you have a tapestry of various people or various professionals. Each of various checks and balances need to be made, and you have to ask for this piece of paper, that piece of information, and eventually you work out what's happened, you clear the trade, and money moves. And if you're lucky, it will be 5 days, more, longer, 3 days.
Yeah, some markets.
I think it used to be 5 days, and then with technology has moved down to around 3 days and so forth. But then if you've got unusual cases, it's going to be longer than that. So you could have a situation, for instance, where a person dies, and you have to wait for a death certificate to come out before something can be done in relation to various, proof of title, proof of ownership, and so forth. The difference is that all of those checks and balances and confirmations and whatnot can be put on the blockchain. And it can be reconciled, verified, and so forth through smart contract technology within a matter of seconds, minutes, almost instantaneously. And because this hasn't existed before, and because exchanges aren't going to shut down what they already have, it's an opportunity to build these systems up in a greenfield environment and then migrate them into the real world operating environment. I think that's what the transformation might be.
And so Leo, I briefly touched upon it a little earlier, right? So your question is basically on the infrastructure of the capital markets, and like in the STO space, why will it succeed now? But let me put it the other way around. So even the ICO space, it could have worked, but the thing is, there were no underlying sort of real companies, right? People raised money on the basis of a white paper, but for me to invest in a real asset class, so in fact, the larger VCs have burned their fingers. There's a large hedge funds who are down more than 50%, like the crypto hedge funds I'm talking about, right? So in that sense, there was no real assets backing those projects, right? Or the projects did not deliver, right? So that's one reason this didn't fail. So I would apply your question to both ICOs or STOs or this new digital asset as an asset class, right? So the settlement, obviously, I'm very positive on the benefits of the instant settlement, and the traditional exchanges are also working on those solutions, right? So in that sense, I would say it's not only STOs will succeed, there will be real businesses like backing real assets. That's when you will develop it into a mature asset class, right? That's why it will succeed. Does that make sense?
Would you like to voice out?
Oh, yeah. So I'm Stephen from Trustler Materials. Wondering about the early bootstrapping of the security token economy. So in the long term, we'll have the ability to tokenize many assets, and the security token exchanges is great. But say for the first 6 months of the industry, the assets that are tokenized need to be much more attractive to investors than if they were to buy the same assets for different fees. So who do you think where will the initial buy side come from? Like, what are the assets that will be most meaningful there?
Well, I think we talked about this before. I mean, some non-traditional assets just lend themselves very easily to tokenization. So art is one deal that we've actually done. You have, and Patrick mentioned this earlier as well, you have highly expensive pieces of art that just can't be sold through traditional art houses. But we were able to create a structure where part of that artwork was crowd-funded through an STO. So that's also easy use case.
Let me give you one more example, right? So for example, I said balance sheet velocity kind of thing, right? That's just, let me break down the jargon. But in terms of any company's balance sheet, right, there are illiquid, non-performing assets, right? But there could be a market for those. For example, let me give you trade receivables, or you have trade receipts, right, which can be on one side of the balance sheet. But if there is, or even there is SME debt, right? For example, this is just one example. But it is sitting on the balance sheet. But what if there is a way to tokenize that illiquid piece and have a fractional ownership, because there is some buyer on that. So you actually are creating liquidity for an actual illiquid asset, right, on the balance sheet side. So there has to be innovation. So that's why it's a merger of the financial guys or whatever and the tech. So we need to be innovative and creative in structuring these kind of deals, right? That's what I would think of.
Yeah, next question. Yeah. Okay.
So two-part question. One, can security tokens be issued on a permissioned blockchain? The reason I ask this is, you mentioned blockchain implementations in exchanges. Now, the Australian exchange, for example, started in 2015. It's a project that's going on to 2022. Now, it comes at a cost to all market participants to reduce it from T+2, T+3 to T. Why are they taking this cost? Are the security tokens giving them a way to kind of monetize this in any way? Can it be opened up to people who are investing in that utility to buy these tokens and then use that utility? Is that a way that's coming up?
Slightly technical one, but I'm not a tech guy, but I'll try to take that from
Yeah, I might be a little bit more qualified to answer that. So I apologize for hijacking this one. So I think your question is why T+3 and all those things move to T+0? What's the convenience?
No, to move the T+3 to T+0, it's not just the exchange that's investing in money. The market participants are also setting up nodes at their ends to kind of run the program, to do the reconciliation.
Absolutely.
They could issue a utility token for this utility.
Right.
Who buys this utility? Why? And can it be made a security token so that it's opened up to a wider public? Is that the benefit of permission blockchain?
Okay, I think
one aspect of putting it the other way is, of course, people get irritated doing a trade on T and then waiting till T plus 3 to make sure that it actually settled. So you have to also see about the mindset. Constantly when innovation like this happens, there's this tension between need for speed and of course reality. And people over a period of time settle into this scope. Like original days, why T plus 3 started or the settlement delay started was, oh, we need time to check the paperwork. If something went wrong, we have the ability to reverse, we have enough time and stuff. The actuality was the funds lie in the bank. Bank makes a kind of a floating rate interest from the funds and things like that. So the reasons why these things originally happened was different. I think Leo raised a good point earlier about, hey, this is behavioral issues. People are entrenched. The people who touch the money and get to have some benefits keeping it there still don't seem to be giving it away. So is it going to change? But there's something that's changed. We've become more impatient, which means we need liquid assets. So today, let's say you're going out to a coffee shop without a wallet and say, damn, I need money. Can I just sell 2 Apple shares and then go pay for the coffee and go on, pick up that kind of convenience? So that pressure is motivating this change. So market participants have to respond. People are looking at it saying, hey, I'm relevant today and I'm making kind of money in this setup, but I have to change for the future. And when you're client-centric and when demand pulls you in a certain direction, if you're sitting in your own island, you want to become extinct. So that's one of the key motivations as why market participants are willing to invest and change. This is always the basis for innovation. The second point you made is about utility. That goes into this slightly tangential topic of transferability of something that's a financial market instrument into something that's usable and liquid. They are leaving aside regulations, that's also a direction that utility is going to be valid. And that's different stakeholders. We can speak about it at length offline maybe after this talk. There are several cases that actually motivates this change. Yeah.
Any questions?
Actually, somebody was asking a question. I was finding to ask about the answer to Leo's question says he was asking about why this is different, right? The problem is that in every other situation, you have this gigantic system that looks like hundreds of years old, and then you just fix the system by adding a little layer. And I actually think that the system is actually unfixable, that they're not going to be able to fix it within the traditional banking system. But what's going to happen is that you've got these new markets. I mean, if you're Thailand or if you're Cambodia or if you're Uganda, right, and you want to create a new settlement system, I mean, the places where you have digital cash just flowing out are places like Kenya, which don't have anything before it. So what you can do with this new technology is you can just forget about all the stuff that doesn't work, and then find some place and then just pull this something from scratch, and then we're actually put it over the new system.
Thank you, Dr. Joe. Yes, Brian?
Hi, thanks for sharing. So, some of you know I'm kind of an old school lawyer. So in some ways, it's a securitization, right? And added to a private placement regime. Same old, right? Except you can now tokenize and securitize e-liquids without cash flow, right? So when you think about it that way from a lawyer's point of view, that's what it is right now. So, but I think what hasn't come out as much is with the STO market, you're really talking about private placement exemptions and therefore only professional investors only, right? Which means retail out and everybody has to be licensed to participate and do that. Can you speak about in Singapore and in Hong Kong, which participants that you've been seeing in the ICO world, now in the STO world, really need to be licensed, right? So, because there are all these advisors that are doing this, doing that, doing this, and don't worry, you don't have to license, but now it's STOs, they need to be licensed both in Singapore and Hong Kong. Can you speak to some of those roles in the licensing?
Not too much has changed because those people, if they were advising, promoting, managing securities, they needed to be licensed. They just didn't get licensed. Most of the advisors who were advising in a way that was a regulated activity in Hong Kong in the ICO space, the sensible ones would only take on the engagement if they'd received an opinion stating, just the thing about when Pooja was speaking about opinions, I just thought, the old Tom Waits song, "Step right up," which says, "A large print giveth and the small print taketh away." You always have to look into the qualifications because most lawyers who give opinions around whether or not something is a security for the purposes of, say, a listing on a crypto exchange will have this qualification saying nobody knows. So you might have, a set of opinions that says, based on what we ourselves understand, we think this is probably not a security, or sometimes we'll say it is a security. But then in the qualification part of it, you'll say, nobody knows. So the advisors would take opinions as to whether or not the engagement they were going to embark upon represented something that was a security, and hence they would need to have a license to proceed further, or was not a security, in which case they were operating in an unregulated space. So I think the dynamics that will change is that more and more of the projects will be in the regulated space, driving the need for the advisors to become regulated and licensed. And the SFC is equipping itself for that, because the activity that's going to be the activity that is the most obvious one is that they're going to be distributing or marketing a security in Hong Kong, which is either going to be acting as principal, which they're not, towards professional investors. So the professional investor exemption is not going to apply, so they'll need a license. That's how it's going to pan out in Hong Kong. But it's the market that will drive it, because it'll be less in the market for unregulated ICOs.
Yeah, I think just to add to that, I mean, there's no getting away from regulation if you're doing an STO. You're clearly in the realm of potentially arranging a deal in an investment, running a collective investment scheme, and you then need to figure out what licenses you need, which is why you do need to be really careful around structuring in Hong Kong and Singapore in particular, because these are not light touch regulation jurisdictions. As to what you can do to stay out of trouble, well, you can engage me as a lawyer for that.
Absolutely. I can allow one more question. Ladies, how about that?
Hi, I'd like to ask a question pertaining to the geographical location of the asset itself. I mean, because if it's, the traditional securities that we talk about in financial institutions, that's a different thing. But for example, if you're talking about real estate or, well, a piece of art as well, because before in ICOs, where the team was or where the project was launched was not so important, as long as you could put your token on an exchange, right? It could be here in Hong Kong. For example, for projects in China, launching here in Hong Kong. But let's say, now, how is it going to change with the STOs? Because let's say, suppose I have a real estate in China, and I want to launch an STO for it. Given that the Chinese authorities are actually quite stringent in terms of tokens, or cryptocurrencies in general, how's that going to play out? I'm just giving China as an example, but it could be any other geolocation.
First, I'm not a Chinese lawyer. In fact, nothing said this evening represents legal advice of any major I don't think we gave that. We didn't give that. So this is an ex post ante disclaimer. I guess the way you would look at that is jurisdictionally what is happening in the place where the STO is occurring. But where it becomes directly relevant is if it's something that is asset-backed and potentially rules and regulations in the place of that asset are going to reflect risks or the exercise of rights that are represented in your in the white paper, the private placement memorandum, and so on and so forth. And those risks and rights or enforcement or licenses or regulations, whatever it may be, are local to the site of the asset. That needs to be explored, investigated, diligenced, explained, and then left to investors to decide whether or not they wish to proceed. And in that particular situation, I guess the unknown would be, again, extending on the China example, quite apart from your traditional issues around doing any, enforcing it in any respect in China, would there be a complication or a layer if the right that is sought to be enforced against the asset is represented by a form of action that itself may not be perceived in a good light by the Chinese authorities or the authorities of wherever. I'm not saying that should be directly directly relevant as a matter of law, but it's certainly relevant as a risk factor, as in if you have standing as a holder of a token, and you go before Chinese authorities and say, this token represents my ability to do something in respect of an asset in China, I wouldn't have confidence that that would be recognized. But you know, you might need to do something else in order first to be able to make that recognized and enforceable in China. So I think that's where it plays in. It's about what's the local rule regulation around assets, risks, all of that kind of stuff on the side of the asset, making sure investors are aware of it and you're not misrepresenting that.
And I think just to add, what I said earlier, there's a lot of technology already out there from the traditional market space. If you think about all these Chinese tech companies which went and listed on the NASDAQ, notwithstanding the restrictions on foreign ownership, there are lots of creative structuring that can be done, setting up variable interest entities and some such. And I think the beauty about security tokens is that you have even more structuring flexibility as compared to, say, just doing an offering of ordinary shares in a Chinese company. So you could set up an offshore structure, have that offshore structure do the STO, and then find a regulatory and tax efficient way to get the revenue from the Chinese operations offshore and then onto token holders. I mean, it's been done before in different versions.
I am so sorry, I'm running out of time, but I wanted to ask everyone to give a big round of applause to our guest speaker tonight. Thank you so much, Pooja, Patrick, and Neil. And one last thing, I will be able to send the PowerPoint presentation from Pooja to all my meetup members who signed up for today. So feel free to stay connect, and this is the QR code for my meetup group. Please make sure to become a member, and you will be notified for all the future events, and those are the information. So once again, thank you so much, and make sure come and get us a business card and get in touch with Patrick and Pooja. Thank you. Have a great weekend, everyone. Thank you.